Okay. Hello, it's Gene Tunney. Welcome to Economics Explored live for Friday, the 22nd of October, 2021. Off screen, I have Tim Hughes with me, who's Business Development Manager at Adept Economics. Tim, good to have you on the program.
Hey, Gene, good to be here.
Tim, you're here as the, how should we describe it? The man on the street, or you're not an economist, but you're someone who is very aware of the issues and someone I enjoy chatting with, and you're here to make sure that I'm speaking in a way that is intelligible to people. So it's helping me communicate this information and my thoughts.
Yeah, I'm here to represent the average Joe on the street, and so if there's something I can interject with, I will, and if there isn't, I won't.
Okay, thanks heaps, Tim. Good on you. Okay, so the idea here is to go over the big economic news of the week, or what I perceive as the big economic news. And in our live stream last week, we talked about inflation, and we looked at the inflation data in the US and also in the UK. Now, there was another inflation, well, there was some inflation data that came out earlier this week from the New Zealand Stats Authority, and we see that inflation in New Zealand through the year is getting up near around 5%. So there's concerns about inflation in New Zealand. And last week we talked about all the money growth that's been occurring, and we expect that should be leading to higher prices, to inflation, based on, research that was conducted many decades ago by the famous economist Milton Friedman, who I've actually put a print of on the wall. I've got that off Redbubble, great site. You can get posters of all sorts of interesting people, so I thought it'd be good to have one of Milton Friedman up there. Okay, so we've got this issue of inflation, and associated with that is this issue of the supply chain, and we see that there are all sorts of supply chain issues in the States. There's concerns about whether goods will get to people's houses in time for Christmas, and that's because we've had this combination of the increase in demand as economies have reopened, as there's more exuberance post-COVID. I mean, even though there's still COVID around, obviously, but we're in many economies, we're past the worst period of lockdowns and the worst period of the pandemic. And also COVID has disrupted the traditional supply chains, and we're seeing big problems there. Have you been following that at all, Tim?
No, I've heard little bits and pieces about forecasts for delays in Christmas shopping and everything. And I have to say, like, with what we've been through in the last 18 months, it seems not that important, to be frank. However, if it's more important, medical supplies and things like that, of course, that's far bigger issues. But I know, for instance, here in Australia, we've had border closures, and so that kind of delay has certainly been problematic.
Yeah. It is rather frustrating, though. So I've experienced a supply chain issue myself. Now, one thing you can see in this shot here is I've got this boom arm. This is a great boom arm from Rode, which is an Australian company, but it's probably not the best boom arm for a live stream or a video. It's a good boom arm for a podcast or the radio. But I've been trying to get a Elgato low-profile boom arm, and I ordered one, and it was supposed to come in a week or so, and then I get an email from JB Hi-Fi the other day saying it's not going to come in until late November. So I think that's associated with that supply chain issue that we've seen.
We're going to struggle on, though. We'll make do.
Okay, yeah, we'll make do. That's exactly right. Yes. Okay. Now, another aspect of, or another reflection of these higher prices is what's been happening with the oil price. And we've seen increases in petrol prices as a result of what's happening in global oil markets. And there was a great note, and I'll put a link in the notes. If you go to either of my websites, queenslandeconomywatch.com or economicsexplored.com, I'll make sure there's a link there to a great article by Michael Knox, chief economist at Morgan, so well-known economist around Brisbane. And Michael's written this great note about Biden's oil and gas lease pause. And according to Knoxy, Biden's oil and gas pause adds US $13 per barrel to West Texas intermediate grade. Okay, so part of the issue, I mean, this is only part of the increase in oil prices since last year. It's related to the Biden administration wanting to reduce emissions in the US, or it could be seen as part of their climate change strategy. So I think that's an interesting note, and I'll put a link to that. But yeah, just thought I'd bring that up because there are a lot of people concerned about petrol prices, and I think petrol prices in Brisbane here are about, is it over $1.70 a litre or something, Tim?
Yeah, it's just gone through its, there's like a 3 or 4 week cycle, and it's just flipped over into the new cycle. So it's around $1.80. But on that note, it's actually interesting. There are a few little hacks you can do. I was shown one this week, the 7-Eleven card that you can, it's just an app you can put on your phone. You can lock in for a week any price that they have. So if you follow that cycle, you can see it gets down to like $1.42. And so you can lock that in for a week if you time it right. And so you can access those cheaper monthly rates for another week, which makes a difference, you know. So,
that's terrific. Yeah.
I'm not sure, has it ever been more expensive than this? Like, it's the most expensive I've seen. So it's $1.80, $1.82 at the most.
That's a good question. I mean, we know that the global oil price has been higher than this for periods. I mean, on that chart there, you'll see that back in 2008, early 2008, it was up around, well, approaching US $150 a barrel. So I can't remember what petrol prices were back then, honestly.
Well, I came to Brisbane in 2000 and it was around 70 cents a litre then. So we're at $1.82 now. The $2 a litre mark is there. So, and I guess this is a bigger picture where this would come into the growth of EVs, electric vehicles, etc., and diminishing demand for fuel over the next decade, I guess. So it'll be an interesting thing to keep touching on to see how that might be affected by the growth of electric vehicle sales and whatever infrastructure is going to be needed to power those guys, and what we do expect to be a reduced demand for fuel.
Yep, I mean, we're still in the early days of EVs.
Yeah.
I mean, there's still such a small part of the market here, and I mean, they really need to become cheaper. They need to become a lot cheaper for widespread take-up because they're still relatively more expensive than petrol-driven vehicles, aren't they?
Yeah, for sure.
Seen.
I mean, it's definitely early days, but I think looking into the next 5 or 10 years, certainly can expect big change there. Okay.
Right, so that's the oil price. And one thing we talked about last week, Tim, or after the live stream, we thought, you mentioned, we should chat about what's going to happen with interest rates. And exactly, and because of this inflation that we're seeing in advanced economies around the world, there are people speculating that interest rates will have to increase sooner than people were expecting. The Reserve Bank of Australia has been saying, well, we won't touch our cash rate until, I think, 2024 or something like that. But then there are people now saying, well, the RBA might have to do something prior to that if inflation does start taking off. And the first mover has been New Zealand, and it looks like New Zealand got ahead of that inflation reading because it increased its cash rate earlier this month on 6 October from 0.25% to 0.5%. So what I got on that chart, these are the policy rates. So these are the targets for the central banks in the overnight cash market. And we see that they're all extremely low. They're at historic lows. and New Zealand's starting to move up, but it's still at an extremely low level. But if we do see inflation taking off and inflation expectations increasing, and this higher inflation being reflected in wage contracts and contracts in the economy, then central banks may have to take action quickly. So I thought you might be interested in that. And I'll put a link to Pete Wargent's newsletter. Pete's one of the top housing market and financial market commentators in Australia. He's got a great newsletter, Buyers. That's his company. He's a buyer's agent. And he's written about how in New Zealand there have been some early rate hikes while the Bank of England seems to be heading in the same direction. Some upwards pressure on yields in Australia, and a few fixed-rate mortgage products inched 10 basis points higher over the past week. Now, this point that Pete's made about yields, I think he's probably referring to, if you look at the bond market yields, the interest rates on government bonds, they have been increasing. So, it looks like the market is expecting higher inflation and higher interest rates in the future. Okay.
It only had one way to go, I guess, from where it was.
Exactly.
It's just a matter of when, so it's just happened sooner than it was hoped or expected.
Yeah, exactly. Good point. Righto. What else has been happening? Bitcoin continues to make news, and for various reasons. The big thing that people are excited about at the moment is the listing of this. There's an exchange-traded fund in the States that is investing in Bitcoin, or is exposed to Bitcoin, or it's investing in Bitcoin miners or something like that. And that's really excited the market. And so Bitcoin's trading at around, I think the last data point I've got is for yesterday. It moves all the time. So be sure to check what it is on Google. But it's around US $65,000 for one Bitcoin. Now, there was some flash crash. I don't know if you saw the news about temporarily Bitcoin plunged to about US $7,000 or $8,000 and everyone was freaking out. But that was some quirk relating to one of the platforms, the trading platforms. But it seems to be back to where it was. So I remember we chatted last year, Tim, and when Bitcoin got to about 20,000 US, and I was saying, I can't understand it. I still can't understand Bitcoin. I think if you are going to buy it, and this is not financial advice, we're not making any financial advice here, you have to recognize that it's gambling, it's not investing. To most economists, there doesn't appear to be any real rationale for the value of Bitcoin. Paul Krugman's described it as a cult. Robert Schiller's made the good point that it's a narrative-driven asset. It's all driven by what people believe in it. Whereas, to an extent, money itself is a fiction. I understand that our money that we have doesn't have gold backing it anymore. But what it does have is it has all of these contracts in the economy that are specified in terms of dollars or in terms of euros or pounds, okay? And so that asset has a value in being able to settle those contracts. Whereas with Bitcoin, who'd write a contract in Bitcoin given how much it fluctuates? But anyway, that's me on Bitcoin. I'm not yet part of the cult, and I would warn anyone getting involved, but then who knows where that could end up, and I could look like a real fool in a couple of years if that's even higher.
I think it's a really interesting area, and one we'll cover again in a little bit more detail in the podcast. But one of the things that surprised me, which I've only discovered recently, is just the amount of energy, like real energy, that is needed for a transaction to be taken or to be completed with Bitcoin. And that just seems like an outrageous waste of real resources for something as ethereal as a cryptocurrency.
Yeah, Tim, just on that, so my research assistant, Taylor Hull, she's been doing some research on that and she pulled out some interesting information.
Okay.
So it is apparent the process of creating Bitcoin consumes around 91 terawatt hours of electricity annually, more than is used by Finland, a nation of about 5.5 million people. So,
yeah. And they have harsh winters, so they're going to have a lot of heating. And so that's a considerable amount of electricity. I just think it's, I was surprised by that. It wasn't anything I was expecting to hear. And I think there's a massive responsibility that goes with that. Because let's face it, people investing in Bitcoin, it's to make money. So fear and greed are the same drivers for this area of finance as they are for any other, I guess, which isn't always good, but that's just how it is. We have these financial markets driven by these extreme human emotions, and this is no different from what I can see.
yeah,
From my
that's
from
true.
my position
Look,
on the street.
no, that's true. Look, this is what Robert Schiller was saying with it being a narrative-driven asset. He's written a book, Narrative Economics, which is very good, where he's talking about the importance of the stories that we tell, and psychology feeds into that. And yeah, this is a good example of that.
I mean, there's a lot of FOMO from people who don't want to miss out. So that is obviously
Yeah.
what's driving the market as well. You know, if you're not on the train, then you get left behind.
This market and the housing market too.
Yeah.
Exactly. Okay, so that's Bitcoin. There's one more thing I wanted to cover today, Tim, which is Australia's reopening. So you see the great news about Melbourne reopening, and everyone is saying we don't care if there's thousands of COVID cases out in Melbourne. We're going to go enjoy ourselves, because everyone's fed up in Melbourne with the lockdowns, most locked down city in the world. So I can understand fully why they're out celebrating.
Yeah, absolutely.
Okay, so good on them. And look, it's great that we are reopening, and we've set a date to reopen our border to the rest of Australia by 17 December. And look, there's a lot of enthusiasm, a lot of exuberance. People are feeling confident, and job vacancies are running at very high at the moment. So people are looking for workers, and in part, this has been aided by the fact that, well, these high vacancies are related to the fact that, well, all of these people, we don't have that the immigration we once had, and a lot of people returned to their own countries, and so we've got businesses that are now looking for new workers. So that's a really positive sign about how the economy may go next year. So it's very possible we'll have a very strong 2022. There's a lot of pent-up demand out there. There's a lot of excitement about different projects and different possibilities. And let's hope the reopening of the economy proceeds as planned and we don't have any more lockdowns. We've got a case here on the Gold Coast. I think there was a truckie I just heard about before. Let's just hope we don't have another lockdown here in Queensland, and Australia can remain open, because we're getting the vaccination rates up. I'm double vaxxed now. I had my second vaccination yesterday, and Queensland's still behind, but yeah, let's hope that we get up to at least 80% double vaxxed in Queensland, and we don't have any huge problems with our hospital system.
Yeah, I think we've got a year of reckoning in 2022, certainly here in Australia, and maybe especially in Queensland, where we've done quite well with the lockdowns. They've been really successful, and we've avoided having many cases or deaths. However, it has led to a bit of complacency, I think, with vaccination numbers. They could be higher, and they should be. Everyone's had a chance now. There aren't queues as there were at the vaccination hubs, and I think if we open up, or once we open up on the 17th of December, realistically, we shouldn't expect to have to lock down again. That would be reasonable, but clearly numbers will go up of cases and deaths, etc., and hopefully it won't be at a rate that we can't sustain through the hospitals, and hopefully we can stay open throughout that process.
Yeah, well, I suspect that we're probably already at a point where we've got high enough vaccination rates among the most vulnerable that we could keep the place open and we don't have to lock down again. That's what I would hope.
I'd hope that too, but I'm not. I think the way we've locked down has been very good, but the habit of doing that fairly in the eyes of the rest of the world, like, you know, we've had very few cases and deaths, and a lot of the world has stayed open now with much higher consequences than what we will be experiencing, I think. However, you know, we'll see what happens, but hopefully we can get everything open and stayed open and keep everyone as safe as possible through vaccination programs and just trying to do the right thing.
Okay. We might have to talk about lockdowns in a future episode and whether they've been worthwhile or not, because there's been a great book I've been reading by Paul Freitas and Gigi Foster, The Great COVID Panic. I think I might have mentioned it last time. They just think the whole world was gripped by this panic last year for very little reason. I know that's controversial. We can talk about that in the future. I just thought I'd mention that because I may have a slightly different view from you, Tim, on that.
Yeah, and I think so, and I think that's a good thing. Like, one thing that has come through from this is encouraging that debate, and it's understandable that there are different angles of this and different perspectives because, yeah, it's an extreme measure in extreme circumstances. So, yeah, it's going to be contentious.
Okay. Tim Hughes, I think should be the end of the live stream. We've covered all the big issues I wanted to cover for today. We're at almost 22 minutes. So thanks for your time today. Really enjoyed chatting. And thank you in the audience for watching.
Thanks, Gene. Thanks, everyone. See you next week.